You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with everyone's favorite bi-weekly source for all things options related. Yes, it is time once again for the Thursday episode of the Option Block with the cool kids call the old OB. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Been coming at you hot and heavy this week. Multiple interviews there on Interview Tuesday in conjunction with the big OIC conference that is going on right now as we speak. So that's that time of year, listeners, usually where I'm stuck in a room chatting with people for days on end, which is always fascinating. But this year, not so much because, of course, still a virtual event, but we're trying to approximate some of that for you. Had a crazy explosion of content yesterday on Education Wednesday. Advisor's Option, you got to hear it early on the live version yesterday if you were listening live. Otherwise, they'll be hitting the feed later this week, so stay tuned for that. Had a good one there as well. Dove deep into the mysteries, the nuances of the covered call. That's a fun one. And of course, a lot more fun coming up later today on TWIFO. So we're just keeping you crazy engaged with options content all week long. So if you like any or all of that, keep rating and reviewing. It really does help. We're seeing so many new listeners from all over the globe. We welcome you all. And hopefully we're keeping you engaged. If you don't like that Rock Lobster guy, well, hey, send your hate mail to him. Do not blame me. Speaking of who we hear from here on the show, let's head on out to the most quiet, the most tranquil of lands, known as St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management, who, as we speak, right before the show, was diligently boning up on his 80s wrestlers themes to try to hopefully forestall a repeat of what happened on Monday's show for next week. Uncle Mike, welcome back to the program. A, and B, how go your 24-hour cramming sessions, sir?
Well, you know what? If this isn't proof of how honest we actually are on the show, I don't know what is. if I do something good and Mark praises me, and I was the king of the '80s for a while, but now he just ripped me to shreds after that last one, and he still busts my chops about Cisco from 10 years ago that I don't even trade anymore. But yeah, Mark, you're an honest person, Mark. You're very blunt, but you're very honest about it. So can't fault you for that. So, but hopefully I can redeem myself on Monday with the '80s pro wrestling game.
You got a whole weekend to study up, sir. So a few all-nighters, get the coffee going. I think you'll be ready to go for Monday. It made it doubly surprising because you were the one who suggested the game. That's what made it. It wasn't like I threw you a curveball and then you swung and you missed. You picked the pitcher. You picked the pitch. And so that's what made it fun. That's what made it exciting. A lot of listeners had thoughts on that, too. We'll get to that a little bit later because we are also joined by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of a little thing called the Robin Hood Trader. Mr. Rock Lobster, welcome back to the program, sir.
It's good to be here. It's quite a kind of a funky day.
It is a bit of a funky day. So let's get to that funk. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, welcome to the trading block where we break down the aforementioned funk, and it is a little bit of a weird one this week because earnings are coming at us hot and heavy, fast and furious. We'll break down all that fun in a little bit, but spoiler alert, most of them have been pretty darn good. A lot of the big names you folks like to trade are popping off this week. A lot of the big FANG names. We had Tesla as well. You name it. If you trade it, there's a good chance they were probably popping off this week. And most of them were kind of blowing the doors off. Yet the markets today kind of struggling a little bit, trying to figure out what they want to be today. They want to be a real boy or they want to kind of descend into darkness. Right now, the NASDAQ's following the ladder, off about 0.33%. So that's given up some of the ghost. Meanwhile, the S&P is up about 0.25% and the Dow up a similar percentage. Our old friends in the vol space kind of hanging out where they were pretty much. In fact, coming into the start of the show, VIX cash was almost exactly where it was at the end of our last show, right around a 17 3/4. So that puts it pretty much unched from Monday. VVIX at about a 107, also almost exactly unched from our show on Monday. VXX was a little bit shy of the 40 handle, so that puts it right back pretty much where it was on Monday as well. And VolQ at about a 20, so up slightly. So kind of a lot of shrugging of the shoulders. We were hoping coming into today's show we'd have a few big earnings behind us. We'd have a little bit more of a sense of what was going to happen from a broad market perspective, what was going to happen from a vol perspective. And it seems like, at least coming into the start of the show, we have almost more questions than we had at the beginning of the week. Mr. Rocklops, you kind of said it's a weird one today, a bit of a topsy-turvy. I have to agree with you. What are your thoughts on kind of the explosion of euphoria we had on the earnings front, and yet this kind of shrugging of the shoulders, this kind of scratching of the chin we're seeing in the broad markets and indeed in the vol space, sir?
It appears to have like a lot of cross currents. You know, that we opened up really strong this morning, over 4,200. It looked pretty good. And then somebody somewhere just decided to pull the plug. I don't know if it's – I think the Ford earnings were not digested well once it got out there with the chip shortage and they can't make cars and da-da-da-da-da. So all of that stuff is – It felt like it was a very much of a maybe TOSAW can comment, but we were rocking, we were rolling. It was looking great on the opening, and then just poof, pop, piffle, rally, gonzo. So you had your shot maybe in the morning to dump some calls or something, but after that, it would just didn't exist anymore. So and the rally just went kind of. Yeah, and I have a feeling, that everything is priced so high. I think we talked about this with Amberson's ORATS data, and just all these stocks are priced for such great things, and all of the big tech companies, just had this gangbuster stuff during COVID. But how long is that going to last? That crazy growth. So I think there's been a pause, and certainly. Vol futures are up a little bit today. That's always a weird, a little bit of an odd sign when you have this kind of action. So all I can say is oddball. We'll see what happens when Amazon reports, but we're feeling. I hate to say we're feeling toppy, but 4,200 pretty fantastic. But as of right now, some of the air has just been let out of the balloon for sure.
Yeah, you're right. That does seem to be the cloud kind of hanging over all of these just record numbers. And again, we'll get to them all in a little bit. Seems like everybody kind of setting new records this week. But the question is behind that is this sustainable? Is this a new normal for you? Or is this really just kind of a strange aberration? And this is not really something we can rely on in the long term. It does seem like the markets are leaning a little bit towards the latter there. Mr. Uncle Mike, what are you leaning towards today in this kind of weird market, sir?
I closed out some short calls when the market came down today. I was debating over whether I wanted to do it yesterday, but I got another opportunity to today. So add a few deltas probably about an hour ago. So it's worked out so far. And that's in the aggressive strategy, of course, everything else just sitting on things. But with this, I'm looking at the market space. Banks are pretty strong today. Banks are looking at XLF, high of the day. We're only 3 pennies off the high of the day. So we are getting a pretty strong move out of the financials. So that's something that I'm pretty optimistic about, quite honestly. The other thing that we are looking at in terms of sectors with what we're seeing, we in the tech space, that's actually down 0.5%, just looking at XLK. So I agree with Andrew from the standpoint that there's a lot of cross currents and that some things are good and some things are not so good for us bulls out there. But the other thing that I'm taking note of is that we had a pretty big sell-off in the 10-year note early in the day, and we've recovered roughly half of the sell-off back so far. So we do have that, and I think that once the market digests Amazon today, tomorrow when the market digests Amazon, I'm still not out of the bull camp thus far, because last night, a lot of the initial rally that we got this morning actually came by way of a gap up from last night. Apparently, the market liked what the president was saying last night. Apparently, I don't know. I try to avoid politics at all costs, quite frankly. But we had a pretty nice gap up, and what it's seeming is that this was a little bit of a profit taking from the gap up with which we had. So we are still probably about 25 points off of the high we made right after the open this morning. So on this, the fact that we have actually had from peak to trough during the day today, we've actually had a 43-point drop, I believe, if I'm looking at my chart correctly, from the move of the market in and of itself. And we're probably about not quite close to halfway back to our highs, but the market is kind of climbing its way back a little bit. But a lot of the initial rally this morning came last night, or quite honestly this morning while we were sleeping. We didn't really get any major moves off of earnings yesterday from the market as a whole, but we did have the rally early in the morning today. So what I'm looking at this stage is that the new all-time high for the market, and had we done the show right at the open today, I could have said my thing, but I really wouldn't feel right about it right now. But 420.72 in SPY, we still have a very realistic shot at getting over that today, and I wouldn't be surprised if we do. The other thing that I'm still looking at is if we do have more vol coming out of the market today. We actually were down. We didn't quite hit the 15 handle at in the early market today, like Andrew had said on Monday, but we weren't too far from it. We got to 1677. I'm showing as a low of the day in the VIX. And if the market likes what it hears from Amazon, the market kind of was like, as Longo would put it, meh with the Fed yesterday. So I don't think the Fed has as much of a factor, at least for today and tomorrow anyway. But if the market likes what it has to say with Amazon today, then tomorrow we could have a pretty bullish day. We'll see, but I'll be honest, I really liked the drawdown today, or I'm sorry, the pullback today, whatever you want to call it, for probably about an hour ago. And we'll see if this continues to bode well.
The Fed, what is the Fed? Who watches the Fed anymore? Such things as the Fed. These are old school, sir. We're in the post-Fed millennial.
Yeah, no one cares.
Yeah, Robin Hood, Mark. Who watches such things as the Fed anymore? The days of the Fed being imminent, measuring the width of Greenspan's briefcase, those days are all behind us. Let's see what's behind us from a market perspective. So far, a decent amount of paper on the screens, as you might imagine, given this kind of weird vacillation we're seeing. It's driving some flow. VIX doing decent paper, respectable, almost 300K right now, 295,000 contracts on the tape. The ADV a little bit shy of 500,000, 493,000 out there. SPY at a little bit shy of 3 million, 2.97 million. The ADV 4.14 million. So SPY's ADV has come in a little bit. The S 644,000. The ADV about 1.1 million out there. So that ADV has also come in out there in the S. The Qs though, they're doing some paper. 993,000. That's already exceeded its ADV of 975,000. So tech heavy NASDAQ feeling its oats today, and small caps following suit as well. 475,000 on the tape right now for IWM. The ADV is 490. So that's come off a bit as well. I got a feeling today it's probably going to beat that. So we're going to see that ADV ticking back up. You want to hear more about what's going on with small caps, the skew, all that good stuff. Vol, stay tuned for TWIFO coming up in a little over an hour. We'll get into all that fun and a whole bunch more. Speaking of fun, let's see how much fun is lighting up our single names out there today. Let's break down our top 10 most active options. Pretty hot and heavy day, as you might imagine. Cost you $265,000 to break into the top 10 today. By way of comparison, some of the sleepier days we've had recently, you didn't get to 265 till you're probably in the 5 to 6 range in the top 10. So a little bit more active day today. I get you to Snap. Snap number 10. Number 9, Citi. Popping back into the top 10. Haven't seen them in a little while. 327,000. So number 9, we're already well north of 300K. So you know it's a pretty active day. Number 8, good old Softy, 342,000. Softy putting up some numbers this week. Number 7, Neo, still there, still managing to cling to its spot in the top 10 despite these big names fighting in there today. Neo doing 369,000 contracts, good for number 7. Number 6, Nokia, seeing them back up in the top 10 again. That's interesting. 383,000 for them. Number 5, AMD, you know, all these heavy hitters in there, and AMD continues to hold on. Good for number 5, 385,000. Number 4, Ford. The Rock Lobster is talking about them. They do seem to be maybe one of the worms that turned the market today because they're getting shellacked. They're at $11.20 right now, off nearly 10% or $1.23. You know, another one, they put up good numbers. They crushed expectations, but it seems like the chip shortage really hurting them. They're expecting, it looks like about a $2.5 billion hit from the chip shortage. So that and maybe some other things leaning on Ford a bit. Well shy, was just north of 13 not too long ago. 11.20 right now. Good for 754,000 contracts right now. Number 4. It's only number 4, 754,000. So we got some paper today, listeners. Number 3, Facebook. Also just crushing the freaking wrapping off the ball this week from an earnings perspective. 823,000 contracts on the tape there for Facebook. That's usually enough for probably number 2, not today. Tesla also just putting up some numbers this week. 966,000 contracts. That's still only number 2 because it's the big dog. The big dog kind of renewed his crown this week and said, you know what, all you other kids can do whatever you want, but we're hanging out here at the number 1 spot for a while. It's Apple. Almost 1.75 million contracts, listeners, right now. That's some paper. That's some serious paper. Of course, we're in the immediate post-earnings blush here for Apple. They also blew the cover off the ball this week. Looking here for where the most biased paper is. Apple's at 72%. AMD's at 76%. Looks like Nokia, 84%, but we have a winner, actually. More biased than even 84%. It is Citi, our number 9 name. 91% of that 327,000 contracts coming on the call side. Oh, I see. They're going ex-div. That's why. All right, take all that. Throw that away. That's nonsense paper if it's ex-div on the call side. So let's get rid of them. So it's probably going to be, looks like Nokia with 84% of their paper coming on the call side of the ledger. Let's get into it, listeners. It's earnings season time. This is one of the biggest weeks of the season. This is what you come to the dance for if you're trading earnings. It's weeks like this. Big names popping off. Tesla popping off earlier this week. Let's see, they put up some numbers. Record net income of $438 million and revenue up 74%. We also had Alphabet this week, Apple, Facebook, and Softy doing some business on Tuesday as well. Apple and Facebook on Wednesday. Amazon today after the bell. Let's see, we had Microsoft revenue, the growth was the highest since 2018. Again, just absurd numbers they're putting up from a revenue perspective. Facebook, the revenue up 48%. I mean, these are numbers that, as we said at the top of the show, these numbers in any other environment, the markets would be look out above. There'd be no stopping to the upside. And yet what we're seeing now, of course, is this an aberration? Is this sustainable? Because these numbers, they seem probably a little bit too good to be true. Maybe let's look into it. And by the way, listeners, we have the earnings move results reports for you hot off the presses right before showtime. You're available right now in your hot little hands. You head on over to theoptionsinsider.com. Let's break down a few of these for you. Ford, they were popping off after the bell yesterday. Went into their announcement, $12.43. Spoiler alert, a little bit higher than they are right now. They were pricing in 4.7%. They delivered almost double that. They delivered 9.8%. So it's a good run, more than 2x their vol. So that's one of the few outperformances. Let's see what else. Oh, eBay, keeping the trend alive. They went into their announcement. They were popping off yesterday. 62.32. They were pricing in 6.1%, delivering again right around 2x that, 11.5% there. So big outperformances so far from a vol perspective. You know, Matt was thinking on vol views last week, this could be the cycle. He seemed like he was backing off that a little bit yesterday on the advisor's option. We'll have to see. Maybe he's back on that tip again because things are starting to outperform a little bit. Facebook popping off after the bell yesterday. 307.10 was where they were trading. They were pricing in 4.7%. They delivered a decent 5.5%, so a little bit of outperformance there. Qualcomm, another one. Let's see, 4.9%. They priced in. They actually delivered 3.8%. So they kind of underperformed a little bit out there. Let's look really quickly and see if we got any other fascinating ones here from an overall earnings perspective. Mickey D's, they were today before the bell, actually. They were at 232 and about a half. They were pricing in 2.4%. They delivered a whopping 0.6%. So maybe not so much there from an outperformance. Here we go. Here's the big dog. Apple. 133.58 was where they were going into their announcement yesterday after the bell. They were pricing in 3.6%, delivering 0.4%, listeners. So not a lot of love there on the Apple front. Again, there's tickers for days here, listeners. You can really just scroll through all these at your leisure and find more of these for yourself. There's a ton. You can probably spend the rest of the show just breaking these down. Head on over to theoptionsinsider.com. Click on the Options, News, and Articles tab to begin your journey to the dark side of earnings volatility. So far this season as well, looking kind of interesting. It's about still light, still 59% average so far in terms of how much vol is being priced in versus how much is being delivered. So perhaps not quite the inflection point some are hoping for yet. I made that call last cycle. I got kind of burned, and I kind of washed my hands of that call. Matt's making that call this cycle. So at some point, one of us will be right. They can only squeeze the vol so far. Listeners, look really quickly. Let's look ahead. Let's look at the Amazon after the bell today. They're trading at, get ready for this, listeners, $3,458.50. They're on their way to becoming a mini Berkshire Hathaway there. They're pricing in 137.5. And in the past, they've moved 140.14. So a little bit light on the juice. We're pretty much right around what you expect. Oh, NIO's after the bell today as well. Check them out really quickly. They're a perennial top 10er now. 41.19 is where their stock was. They were pricing in 269. Get this, listeners. In the past, they moved 571. So they've really come for the vol in NIO. That's interesting. Twitter, 65.70. They're after the bell today as well. They were pricing in 574. In the past, they moved 719. So seems like folks are starting to get the memo, listeners, that more vol is no bueno in this environment. We'll see. Is this the inflection point that we've all talked about here for over a year since the pandemic began? Matt, seemed to think so. Then he kind of backed off it. I was hoping, but I wasn't as optimistic as he was. What do you think? Is this the moment we've all been waiting for? We shall find out. I know what else you guys have been waiting for, though. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block portion of the show where we unleash our Eye of Sauron, see what it finds out there in the markets. And before we unleash our Eye of Sauron today, let's actually unleash the Eye of Andrew first, because something came across his radar. It must have been pretty big, because he's kind of myopic there. Kind of hard for him to see things that are too far away, unless they're pretty big. But Mr. Rock Lobster, I noticed a print came across your radar recently out there in GE, sir. So what was it, and why did it catch your eye, sir?
Well, it was fairly large. So it was June 17 calls. I saw 61,000 traded. June 17, 61,000 traded a nickel, and I thought, okay, that's a pretty big print. Although the open interest was pretty large, and as much as I wanted it to be awesome, it looks like it was a short call covering close. On that trade. So it was big, it was beautiful, but ultimately it looks like somebody was just closing some options, which, given they were $4 out of the money, I mean, I guess for some risk control a nickel, but I thought it was going to be a beautiful thing. But it was not. However, I will say there is well over 150,000 contracts open on the June 15th. So I don't think GE is quite done yet, but as of right now, the awesomeness just kind of it's I'm just going to say it's a little bit of a piffle, kind of like TOSAW with that that wrestling guy.
That wrestling one, yes.
His theme song.
That was a bit of a piffle.
This is very similar. Very similar.
This is why we don't have Andrew do the Odd Block, listeners, because he comes up to us with closing covered calls. That's his scintillating Odd Block trade for this week. That's why one of the filters we put on first, listeners, is opening, just to get rid of that kind of paper out there. But hey, to each their own. Some people like to see people closing size covered calls. Let's instead turn to what our Eye of Sauron found out there today. Some weird stuff popping up. Kind of a weird day. It's an active day, but not those 65,000 covered call closing prints today. Other more nuanced stuff, including some newcomers here. We got CLIR Sign Technologies coming on the radar today. Ticker symbol CLIR. This is a UK-based emission control company. Let's see, trading 475 right now, off about a quarter, or about 5%. A year ago was trading 97 cents. They got down to as low as 45 cents. So this thing's had a bit of a run since then. It's like it gapped up back on June 15th. It went from 79 cents to $2.50. Wow. That's a nice little pop. And then it kind of hovered in that 2.5 to low threes range, it seems, for the better part of the rest of the year. Coming into the beginning of the year was at 385. And then it kind of shot up by April 1st. So April Fool's Day, it was trading $5.80. So that's quite a run from 45 cents to $5.80. And then it looks like it kind of just, again, April Fool's Day maybe made some fools out of some people, because this one, once again, like some other names you profiled, sold off pretty aggressively, got down to $4.40 a week and change later. Then it tried to pop again, but it couldn't really maintain it, and it sold off again down to about $4.15 or so. Looks like it rallied again recently, though, because now we're coming back off it again. Rallied back up to $5 even, only to fall right now. I think this thing moves in weirdly even increments, a quarter, a half, up to 5 and back off. That makes me a little bit suspicious of the stock movements in and of itself. Usually you don't see these nice clear-cut intervals, 25 cents, 50 cents, that you do in names like this, but that's what we're seeing out here. Let's see what our Eye of Sauron found. Maybe that's a little bit weirder. Looks like we're going out a little bit to May, so not that far, just front month here. We're going out to May, 5 calls, so again, a strike that this name has blown through, but recently bounced off of, going up 4,166 times. Get this, Mr. Rock Lobster. You'll like this, or maybe not. I've talked before about some markets that I've found to be not exactly representative of the best the options market can offer. let's just put it charitably. This probably falls in that latter category. Now, bear in mind, this is the name that does 474 contracts a day. So I don't expect nickel-wide markets all the way out. But give me something. You got to work with me here. The market on this, Mr. Rock Lobster, for these May 5 calls, 25 cent out of the money, actually at the money calls as of this morning, effectively with a few weeks to go. The market, you ready for this? No bid at $10.
You know what the brokers used to call that kind of market?
That was get the hell out of here. Don't trade this.
That was you could drive. Oh, you could drive a truck through that. Now show me the real market. That's exactly what they used to say. You could drive a truck through that.
Like, how is that even disseminated? I'm as the former market maker in me just curls up in disgust at that. No bid. Who trades that? I guess this guy did 4,166 times. Guess what he got filled at, Mr. Rock Lobster?
Somewhere in the middle.
You might assume that. No, he got it done for 43 cents, 43.4 cents.
Well, that's when you think about it, that's actually reasonable when you saw that no bid at $10 go out, at the beginning. Not a bad fill.
Yes.
You know what's even funnier, though, about that fill? That they're offered at 40 cents now after.
So he discovered the market. Good for him.
Yes, there's nothing like a broker filling something and then the market is actually lower than the price the guy just paid before he got back to the booth. And then the broker would come in and literally want to strangle you on the spot. I don't know.
So I'm guessing that $10 offer was not real and that they found a 43-cent offer and actually paid it. I'm going to go out on a limb and say that, Mr. Rock Lobster.
Well, they paid the 43. Now they're at 40. That's like, the broker who probably filled the 4,000 was feeling pretty good, and now
he did a damn good job discovering price. He found a market at no bid at $10.
Yeah, and then they make the poor guy look like a schmuck right after he trades it.
So I'm gonna go out on a limb and say this guy probably bought these. We're gonna keep an eye on these listeners because this is just too ridiculous not to return to. No bid at $10. That's like, go away. We don't want your paper. For all the action, all the liquidity that's gone up in the options market, we talk about so much volume. March, the most volume-heavy month in the history of the business. There still are names like this, esoteric names like this, where they effectively don't want you to trade. Because look, no bid at $10. When they're giving you that market, they're like, go away. We don't want your business. Oh, that's horrible. All right, let's see if we can find something better. Let's go to we'll come back to this one, though, because that just cracks me up. Let's go out to a name we were just talking about, Ford. It's like it's getting a little bit of its gusto back, up to almost 11.30 now. So only off $1.15. It's getting clobbered today, though. I won't bother regaling you with the full. Well, let's do a quick rundown of the year that was Ford. A year ago, 5.25. Got down to as low as $4.52 in the madness. I remember back then even reading some articles about Ford is a value trap at $4.50. I remember thinking that doesn't seem right. And lo and behold, it was not, because stock way north of that. Gapped up on everyone's favorite day, June 8th, all the way up to $7.53 before it gave a lot of it back up. By July 9th, a month later, it was trading $5.84 again. So it had a nice little run, then it gave it up. And it kind of languished, and towards the latter half of last year started rallying again, got up to about $8 in October, traded almost $10, 9 and change in December. Came into the new year kind of roaring pretty aggressively. It rallied from about $8.52 on pretty much the first day of the year for trading, January 4th, and then it rallied all the way up to $11.50 on January 22nd. So a good little start of the year, and then it kind of kept rallying all the way up to $13.37 back in March. Hasn't really hit those levels again since, because it's just been a few fits and starts, but pretty much down since there. And of course, today's news, not exactly good for the stock. Let's see what our Eye of Sauron found. A lot of paper going up in Ford, as we mentioned earlier. So it's kind of like spitting into a hurricane, parsing some of the analysis. But our Eye of Sauron did find one block it found kind of intriguing. It was the 11 halves going up in the weeklies. These are expiring, coming up. One of these expiring on the, these are on the 14th. So yeah, these are in the weeklies. 11.5 calls going up for 28 cents. These were nice and tight. As opposed to no bid at $10, these were 27 cents at 28. That's what happens when you put up 700,000 contracts. You can get markets like that. So it's like paper lifting that offer nearly 4,000 times, getting a little bit of love. So Mr. Rock Lobster, it seems like someone perhaps thinking this drubbing in Ford a little bit overdone, paying a fairly hefty vol for Ford, a 47%, to come in and get a little bit of near-term scoopage, looking for a rebound north of the 11.5 strike in a couple of weeks, sir.
Yeah, I look at that and like the vol has been crushed in there. I'm more interested in actually selling the 11 puts for 33 cents in May, like 3%. I just pick up a couple thousand shares of Ford. It's $600 in a month. I don't know how much of the bad news is out, but it's not one I would want to buy a call on. I have to be honest with you because normally they're like, okay, the news is crappy. We got it's sort of a sideways trade. It doesn't feel like a direct like buy a call and stock goes up a bunch. Just it's very meh as far as the earnings go. Kind of a disappointment. So I see what they're doing. The options are cheap, but I don't see that. I don't see that bounce in the short term. But of course, obviously, I can be wrong. I can be wrong, but I'm looking more at selling some puts or 1x2 put spread in there. Definitely, I'm not. It's not feeling like a direct long to me right now.
Now you said that, back up to 1362 next week, sir. Here we go. We'll keep an eye on this one as well. I'm sure more than a few of you are playing out there in Ford. It's a hot one and a little bit more reasonable from an underlying perspective than, shall we say, Amazon. Let's go back really quickly then before we head on into your questions on Mail Block Thursday. We got a deep well of trades to pay off, listeners. Let's go back now to pretty much exactly a month, March 29th, to some Under Armour call love we talked about here on the show back then. At the time he profiled, somebody really had to have the April 17 halves. We first noticed a block of 3,161 going up for 90 cents, lifting the offer when the stock was $17.77. But that was not the end. No, that was just the beginning, listeners. Another block, similar size, pretty much the exact same size, actually, going up for the same price, 90 cents. Then we've got another block going up for 1,836 times for 75 cents, 1,042 for $1.10, 762 for $1, and so on and so forth. That continued till you got pretty much a total of about 15,000 that went up on the day, listeners. For prices around 90 odd cents to $1. Let's just say 90 to make our lives a little easier. And it seemed like this person really had to get into some Under Armour. They were liking it. There were earnings, but not in this cycle. Earnings are actually still have not come out yet. They're on May 10th. So this is all well ahead of earnings, this paper. But someone really wanted these calls, and it seemed like they had pretty decent timing. These calls, I'd say mostly worked out because the stock took off right after this trade. And coming into expiration, which was on the 16th, the stock hit a high of $19.19 on the 12th. So if you're going to hit your highs, if you can't get it early, at least getting it in before expiration, clearly nice there. And this was early enough before expiration to still have some juice on these calls. So these things, again, 17.5 strike, stock trading at $19.19. That's looking pretty good. Let's see. And the stock closed at $18.42 on expiration. So also north of the strike and pretty much right about where the break-even level was for these calls. But this guy didn't wait for that. He was, as we've advocated many times before on the show, you get your move in the long premium side, you get while the getting's good. That's what this guy did, at least for the most part. It looks like he closed 11,000 of these 15,000 calls on April 5th for $1.50. So he actually took them off for a nice little profit. He didn't take all of them off, though. He took about 11,000. There's still about 4,200 open on expiration. It looks like it's still, like I said, mostly worked out. Let's say if he averaged around 90 cents for most of these calls, then he paid about $1.35 million for these things. And on the 11,000 lot that he sold, he made $1.65 million. So he covered himself and then some on the 11,000 lots. So you can probably see, he can say, okay, I'm covered to actually put a couple $100,000 in my pocket. Let's let the rest ride and see what happens. And apparently he rode them all the way into a nice long position at around $18.40, which He's got some stock now, about 400,000 shares, but he's looking pretty good on that as well because the stock's trading $20.14 right now, a wee bit north of his 1840 level. So Mr. Rock Lobster, actually it's up even, it was trading 1986 at the start of the show, so this thing's had a little bit of a run today. So Mr. Rock Lobster, it seemed like this guy did pretty well. He took off his calls when it was still advantageous to do so. It didn't let his premium go away. Still left some open, which you could maybe argue about. Maybe he should have taken them all off, but he clearly wanted some stock because he got some. And that stock is also looking good now as well, Mr. Rock Lobster. So it seems like he's pretty much 2 for 2 on this trade, sir.
Looking at this Under Armour, this is like one of those ones. It looks like he's doing okay, right? But as far as this is one of those stocks, wasn't this like a $60 stock, something like this at one point? It looks kind of like a sometimes, I guess, Mark, sometimes it just works out, right? Like, I guess what's one of the rules when you buy calls? You need to sell them when you make money. And how many times have we seen that where, you buy the call, you make some money, and you watch your gains. You get happy with the green on the screen, and then what happens? It just fizzles into sadness. So I don't know how many times you and I have reported on this where somebody makes big bucks, and then they just let it all go away. So I would just remind people, we all have the same problem. You look at the green on the screen, and then you let it all go away. So reminder, you buy options to give them back at a higher price. That's because you run out of time. That's the reality. It's not stock, so you got to take the money. But anyway, this is another success story.
Yeah, this is one of the few long premium success stories we've had in all of our odd block for the better part of the last year. We've had so many where people bought premium and it worked out their way and they let their money wither and die on the vine. This guy actually took some off. So more power to him. Worked out well. Now let's see if there's more power to you because it's time for the Thursday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where you guys take the reins, your questions, your comments, your insights, your pearls of wisdom. First off, let's pay off our poll that's going hot and heavy. You guys can still play. I do believe might be an hour or so left on this. I'm not sure if the folks after, there's an hour left. So the folks after the fact on the podcast probably won't have a chance, but a lot of you have already had a chance to chime in. It's big earnings week, Tesla earnings week in particular. So let's play another round of our favorite game. Guess the size options position in Tesla land. Quite simply, what's the biggest open position in Tesla right now? No cheating, no checking it on your brokerage platform. Just use your gut. Gave you 4 choices. The June pars, a.k.a. the 1000s. The March 2023 900s. The June 2022 $1 puts. And the Jan 2023 $120 puts. So there we go. A little bit of something for everybody out there in terms of term, in terms of direction. What do you got? Uncle Mike, we'll start with you. Do you have a vote? And then more importantly, what do you think our audience is voting for?
I'm going to go with the June 22. What was the strike again, Mark?
$1.
Yeah, I'm going to go with that one.
Oh.
That's what I think it is. I think that maybe it's people are just loading up just in case it goes belly up. So you never know. That's what I'll go with.
Well, interesting. Yeah, that's all I'll say is interesting. Mr. Rock Lobster, same question for you. Do you have a vote? And more importantly, what do you think our folks are voting for?
Oh, these are our Tesla calls, right? Or Tesla?
Yes, Tesla.
Okay.
Could be calls, could be puts. What's the big position?
Okay, I keep thinking the 1000 strike is the one that really is going to get people's fancy, even though they're not calls that I would want to buy. But that's what I feel. I think the audience is still pretty bullish.
They are bullish. I will say this, Mr. Uncle Mike, he's played this game before. He remembers. Our audience, for some reason, forgets every time. Whenever we talk about the size positions in Tesla, I'm going to let the cat out of the bag now, listeners, because there's only an hour left to go on the poll. Whenever we talk about size open positions in Tesla, what are they? They're the quote-unquote catastrophe puts. So our audience right now is overwhelmingly feeling bullish. 59.1% of you saying the June pars. The March 900s coming in at number 2 with 18.8%. And then the June 2022 1 puts with 9 point. Actually, I take it back. Then the Jan 2023 120 puts with 13%. And then bringing up the rear, the June 2022 1 puts. And guess what the winner is, listeners. Yes, it's the June 2022 1 puts. One of these days, we've done this many times. It's always the crappy puts. Right now, there are 116,000 of these bad boys opened in Tesla land right now. By comparison, the June pars you folks are all enamored with, only 44,000 of those bad boys open. So the top 3 positions of Tesla right now, they were the same on Monday pretty much as well when we posted this. The June 1 puts, 116,000 of those. Number 2, the Jan 2022 1 puts for 76,000 of those. Number 3, the June 1 puts with 45,000 of those for June of this year. And then number 4 are the June pars with 44,000. So yes, all those are real positions and they're all open for size, but number 1 with the bullet, still the crappy name. I'm looking here. We got some people chiming in with their questions for Uncle Mike here. They have suggestions for the theme music. I will just take out the name of what they said, but people liked the Ultimate Warrior thing. Even though one person said the theme went on too long, I take issue with the characterization of that statement. It is technically and theoretically impossible for the Ultimate Warrior theme to play too long. There's only, can I have more, please? That is the only acceptable response when you hear the Ultimate Warrior thing. It is technically impossible for that theme to play too long. There's always enough and please, may I have more? That's the only acceptable questions and comments when it comes to all things Ultimate Warrior theme song. We have a guy here suggesting his favorite tag team theme music. I agree. They were also my favorite tag team. They might make an interesting insertion into the down the road way. He says that would be an easy one for Uncle Mike. So let's redact the name of that team just in case. And we got a question from Ronald Grenon. He wants to know, where do I find the free earnings reports you always mention on the show? Love the show. Well, thank you, Ronald. We love you back. Go to our website, theoptionsinsider.com. Once you're there, you're going to see the homepage. It's got a bunch of shows on there because we make the shows front and center because we do a lot of shows. Look at the right. Remember I say, look at the top right corner of the homepage. You'll see a tab there called Options, News, and Articles. If you click on that, you will be taken post-haste to a whole bunch of different sections. We have most active options, earnings reports, industry news, education, shows again, and you'll see in the earnings reports and everywhere else there all this good stuff from ORATs and everyone else. They're including today's hot off the presses. So if you want all the earnings for this week, and hey, this is the week you kind of want them, get on over there, theoptionsinsider.com, click on that Options, News, and Articles tab, and then you too can begin your journey. We got Stocks and Guitar. He asks if intentionally swap the Options Bootcamp podcast with the Options Playbook Radio tonight, aka trick us, or was that a mistake? Either way, it was a good episode, and I'm glad I finally got to hear it, intentionally or unintentionally, after hearing you tell us to do so for all of the time now. I'll have to check into that, Mr. Stocks and Guitar. To my knowledge, they should have been posted to the correct feed. If they were swapped, A, that was an error, but B, as you mentioned, kind of a happy one. I know a lot of you folks love Bootcamp. You should be listening to OPR if you're listening to Bootcamp. So we'll make sure if they are messed up, we'll fix them. But hopefully you got a taste of a different show that maybe you don't hear, which if you're listening to Bootcamp, you should be listening to OPR and vice versa. You really should. They're kind of they go hand in hand, those two shows. All right, next up, Uncle Mike. We talked about this on Bootcamp yesterday, but I thought it'd be a good one for you as well because you were just talking earlier this week on your strategy block about diagonals. This comes in from Alexander from the Netherlands, and we love our international listeners as well. He says, hi, guys. Great shows. Thank you, Alexander. He says, my question is about put credit spreads. To manage the risk that the stock drops to my long strike just before expiration, so obviously, listeners, blows through his short strike and goes all the way to the long strike, a.k.a. kind of your worst case scenario in a short put credit spread there. He says, I tend to prefer diagonals with the long position expiring 1 week later. This would generate some Vega profit in my worst case scenario. What are your thoughts on this strategy? So we kind of debated this on our boot camp show yesterday, myself and Mr. P over there from Market Taker. I won't give you our thoughts on it yet because I don't want to color any analysis you have, Mr. Uncle Mike, but I'm curious for you. What are your thoughts on this? Instead of selling a straight up put spread in 1 month, he rolls the long leg out a week. Obviously, it's going to cost him more money. He's not getting the same credit he would to do that, but he thinks, as he puts it, the Vega profit will offset the negative gamma hit and be worth at the end of the day for paying a little bit more for that spread. So what are your thoughts, Uncle Mike?
I would suppose it depends on what your initial time frame is for the short leg of the put spread. I've never done it with a 1 week difference before, but I have done that strategy in that I've substituted the long side of it with something a little bit further out. I've found that that's possible to get a Vega profit, but I don't think if it's going to blow, unless your strike prices are very close together, then I don't know if it blowing through the short strike would necessarily, in that scenario, I don't know if the Vega profit would offset the gamma loss unless you have very close strike prices. And like I said, I've never done it from a 1 week time frame, but that would be one area to where I could see it coming close as a full offset. No, I don't see that happening. And also the other thing to consider with that is how much time, at what point during the spread does that actually happen? And so if it's happening, say maybe on expiration Friday of the short leg of the spread, then the other thing that you have to contend with is that you're also going to have some type of Vega that's happening on the short leg as well. But once again, it depends on how far apart the strikes are and how far apart the expirations are. If the expirations are, let's say the short leg is 1 week and the long leg is, or I'm sorry, let's say it's you're 1 year out and then 1 year and 1 week out, then it's probably not going to make that much difference early on. Whereas if it's, say, 2 weeks, 1 week, I could see it possibly happening. But overall, I would not count on that happening just because of the fact that Vega is not guaranteed. In other words, if markets go down, there's no guarantee that vol is going to go up. Oftentimes it does happen, but if it doesn't, then you're going to be in trouble with that. So I think overall, to sum it up, if you get the inverse vol market movement relationship that is very typical, it could help, but also it would depend on how far out the strikes are to begin with, as well as how far apart the strikes are as well.
Mr. Rock Lobster, any thoughts on this, rolling the long leg of your short put out 1 week as a bit of a protective boost, sir?
Interesting. I see why you want to do that, but my question is I don't necessarily. I'm not happy with like booking a capital loss and leaving a capital gain open where you haven't captured it in a trade because you can get into kind of a bad daisy chain that way. I would think to me, I just roll the whole thing, or I create like a serial put spread where I would rather buy the long-term out of the money put as my margin cover and then just aggressively write puts every week against that put. So you don't have to keep rolling that one. Sometimes if you get a pretty like a low vol situation right now, right, where you're like, okay, I'm just going to keep that put out there, and then I'm just going to write a batch of puts against it, for a month and see what kind of bucks I can generate. I don't normally roll my dead put, spend more money, and then kind of hold on to it. To me, it's like it's trying to, if the trade hasn't worked out, you're kind of stretching out a trade that hasn't worked. So it's I have a hard time with that, actually, to be honest. It's not my favorite thing to do.
Yeah, we kind of took a little bit of a dim view on it on boot camp yesterday as well. It's an interesting idea. I wouldn't mind seeing it maybe analyzed and broken down, but my gut to it, and I think Dan's as well, was that it wasn't our preferred way to go. But we love our listeners always throwing us interesting curveballs out there. Like this one from Zaz. He wants to know, this is kind of following up on a question I think we had earlier about those RRSP accounts. He says, do you think brokers up in Canada will soon allow us to sell puts in our retirement accounts? Any insights? Well, Zaz, you're in luck, or at least I should say, maybe not in luck, because the answer is no. But your question is timely, because I just had a conversation this week with the folks from the Montreal Exchange. And in deference to all of our listeners from the Great White North, I asked them this exact question. I said, hey, what's up with your crazy retirement accounts up there? How come I could sell a covered call and not sell a cash secured put? And they seemed a little bit surprised and taken aback by that. And they actually said they're going to go back and look and see what the deal is and maybe talk to the regulators. But right now, at least, the answer is no, Zaz. But hey, I did put a little comment in for you folks there in your favor. So hopefully maybe soon that'll cause a little bit of improvement for you folks, get things modernized a little bit up there, because that's kind of absurd. If we can do it down here in our IRAs, you folks should certainly be able to do it in the Great White North. All right, we got one more here. This comes from, we were discussing on another conversation I had on the network recently on our interview show about maybe revisiting the level 1 to 3 approval process for options, maybe adding like a questionnaire or something for people who want to apply for level 3 to try to verify that they have some options knowledge. This guy, Bobby Angel, chimed in to say the level 1, 2, 3s are just tuition. So the money you're going to lose by getting level 3 when you're not ready for it, it's your tuition cost for learning how to trade options. Well, I guess that's one way to look at it. A more optimistic way, I suppose. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're keeping an eye on until Monday on our next episode of the Option Block. Let's start with the unclose to Mike, sir. What are you keeping an eye on here in this weird kind of mixed market, sir?
Well, I want to see the Amazon earnings today to see if it's a market mover or not. Also, I'm actually watching a daily chart today. I've already taken all the action I'm going to take in my aggressive trading strategy. But we're getting close to, we've been knocking on the door of the high of 3 hours ago in the S&P. So continuing to watch that. And then I'm also watching the 10-year note. It's kind of had a little bit of a rally over the course of the last week, pulled back a little bit today and is getting some traction off of that. So those are the things with which I'm watching.
Mr. Rock Lobster, same question for you. What are you keeping an eye on throughout the weekend, sir, until our next show on Monday?
Well, I'm that 4,200 is kind of looming large there again. So I'm looking at that. I'm also looking at the very curious bid for VIX. And there was a bid for the futures today. It actually looked like we were about to break for a couple of seconds there. And then as much has happened in the last month or so, the big bid for vol went away and everything kind of went poof. So to be honest, I'm looking for a potential low for VIX tomorrow if Amazon earnings are pretty good. And I think mostly it's just kind of a meh on the upside, where we're just kind of poofy. We really don't move a whole lot. Let's see how long the vol stays at this level. So, you heard lots of rah-rah yesterday, and we'll see if it carries into higher stock prices. But, I guess we've said this every month, but we need a catalyst to go up and some just better news maybe globally from COVID and all that. I mean, Ford not having chips and India still having all kinds of COVID issues, none of those are good things. So, especially for stocks. So I'm kind of hanging out, waiting to see what happens with that.
And unfortunately, that music means we are no longer hanging out, at least on this program. But if you're hanging out live, stay tuned. Put some fun stuff in between the episodes. We'll be back in exactly half an hour to break down all the hot action in the world of small caps and who knows what else. ags, rates, energy, metals. You never know. You got to come to TWIFO Lumber. You don't know what's going to light it up. Bitcoin, that's what TWIFO is there for. But before we go, let's go back around the horn. Let's start with the Unklest of Mike, sir. Mr. Uncle Mike, what are you? I know what you're watching. Where should folks go if they want to catch up with all things Uncle Mike, sir?
For sure. You can check out my website, stcharleswealth.com. Check out my blog. I share a link to my blog on Mondays just to kind of do an enhanced strategy block. I share it on Twitter. Follow me on Twitter at Mike TOSAW if you're looking for a financial advisor who delves in the option product from time to time.
Mr. Rock Lobster, same question for you, sir. Where should folks go if they want to learn more about all things rockingest of lobsters?
Go to optionpit.com. Look at our memberships area, our products, and check it all out. Also, we have a lot of good content now on our homepage. Trade ideas, blogs, observations, and stuff from our staff of writers. So as OptionPit grows, all of our internal students really like it. So come on over. Hey, and the price is right, too. If you want to spend some bucks and learn about things, come on over and talk to Ted at optionpit.com, and he'll set you up.
Talk to Ted. That's what I always say. Talk to Ted. No matter what your question is, talk to Ted over there at OptionPit. On behalf of the Rockingest Lobsters, Young List of Mikes, and indeed myself, thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting in our polls. We'll see you back in a little bit less than half an hour now for TWIFO. Back again tomorrow for Volatility Views. Then it all kicks off again on Monday. Another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.